Bitcoin has captured the world's imagination, not just as a new form of money, but as a digital asset with a price that seems to defy gravity. For over a decade, its value has climbed from mere pennies to tens of thousands of dollars, creating incredible wealth for early believers. This dramatic rise has fueled an intense and ongoing debate among investors, technologists, and economists. The central question on everyone's mind is no longer if Bitcoin can reach new heights, but how high it can truly go. The most electrifying target discussed is $1 million per coin, a milestone that would solidify its place as a major global asset. The excitement around such a massive price target is understandable. People see Bitcoin as digital gold, a safe place to store wealth in uncertain times. Others view it as a technological revolution, a new financial system in the making. This blend of hope, technology, and financial speculation creates a powerful narrative. Every time the price surges, headlines light up with bold predictions, drawing in new waves of buyers who fear missing out on the next big jump. This cycle of excitement and investment has become a defining feature of the cryptocurrency market, making the $1 million question more relevant than ever. However, for every passionate supporter, there is a skeptic who warns of a bubble. Critics point to Bitcoin's wild price swings, its use in illicit activities, and the regulatory uncertainty that surrounds it. They argue that its value is based purely on speculation rather than any real-world utility or intrinsic worth. This clash of perspectives makes it difficult to find a clear answer. Is $1 million Bitcoin an inevitable outcome of a groundbreaking technology, or is it a symptom of irrational exuberance? The truth is likely somewhere in the middle, shaped by complex forces that are still unfolding today. The debate is not just about a single number, it's about the future of money itself. If Bitcoin were to reach such a valuation, it would mean a fundamental shift in the global financial landscape. It would challenge the dominance of traditional currencies like the US dollar and force governments and banks to adapt. Whether you are a believer or a doubter, the journey towards this potential milestone is one of the most compelling stories in modern finance. The stakes are incredibly high, and the world is watching closely to see what happens next on this unpredictable path. Some of the most respected and forward-thinking investors in the financial world are incredibly optimistic about Bitcoin's future. They see its potential not just as a currency, but as a transformative technology. Cathie Wood, the founder of RK Invest, is one of the most prominent voices in this camp. Her firm has published extensive research suggesting that Bitcoin could reach $1 million per coin by the year 2030. Her argument is built on the idea that more and more large institutions like pension funds and corporations will start allocating a small portion of their massive portfolios to Bitcoin as a hedge against inflation and economic instability. Another influential figure with a strong bullish outlook is Arthur Hayes, the co-founder of the crypto exchange BitMEX. He also sees a path to a seven-figure valuation, though his timeline and reasoning focus more on global economic trends. Hayes believes that continued money printing by central banks around the world will devalue traditional currencies, forcing people to seek out scarce assets like Bitcoin to protect their wealth. He argues that as trust in government-controlled money erodes, the appeal of a decentralized fixed supply asset will grow exponentially, pushing its price into the stratosphere between 2028 and 2030. Beyond individual predictions, analytical models support these optimistic scenarios. The stock-to-flow model, for instance, attempts to predict Bitcoin's price based on its scarcity. This model compares the total existing supply, the stock, to the amount of new Bitcoin being created each year, the flow. Because the creation of new Bitcoin is cut in half approximately every 4 years in an event called the halving, its scarcity increases over time. Proponents of this model suggest that this programmed scarcity will inevitably drive the price upward, with some projections pointing to $1 million valuation around 2029 or 2030. The core of the bullish argument rests on the idea of network effects and institutional adoption. As more big companies like MicroStrategy and Tesla have added Bitcoin to their balance sheets, it has become more acceptable for others to follow. The recent approval of Bitcoin exchange-traded funds in the United States has made it even easier for traditional investors to get exposure. The bulls believe this is just the beginning of a massive wave of institutional capital that will flow into Bitcoin over the next decade, providing the fuel needed to propel its price to $1 million and beyond. While the dream of $1 million Bitcoin is exciting, many respected analysts urge caution, pointing to significant obstacles that could slow or even halt its ascent. Not everyone agrees that the path is clear. Some forecasts are far more conservative, suggesting that reaching such a milestone could take until 2035, or may not happen at all. These more careful outlooks are not necessarily pessimistic. Instead, they acknowledge the real-world challenges that Bitcoin must overcome. The primary concern among skeptics is the asset's legendary volatility, which can scare away the large, stable institutional investors needed to push the price to such levels. One of the biggest and most unpredictable hurdles is government regulation. As Bitcoin becomes more integrated into the global financial system, governments around the world are taking a closer look. While some countries have embraced it, others have imposed strict bans or heavy-handed rules. The threat of a major economic power like the United States or the European Union enacting harsh regulations could severely damage investor confidence and limit adoption. This regulatory uncertainty creates a cloud of risk that hangs over the market, making long-term predictions extremely difficult and subject to sudden changes. Furthermore, for Bitcoin to reach a valuation of $1 million, it needs to achieve much wider adoption as a practical tool for transactions, not just as an investment. Currently, using Bitcoin for everyday purchases remains slow and relatively expensive compared to traditional payment systems like credit cards. While solutions like the Lightning Network are being developed to address these issues, they have not yet been widely adopted by the general public. Without a clear and compelling use case for the average person beyond speculation, Bitcoin may struggle to achieve the mainstream acceptance necessary for such a massive price increase. Finally, the macroeconomic environment that has been so favorable for Bitcoin could change. The narrative of Bitcoin as a hedge against inflation works well when central banks are printing money and interest rates are low. However, if global economies stabilize and central banks tighten their monetary policies, other investments like bonds or stocks might become more attractive. A shift in these broader economic trends could reduce the flow of money into Bitcoin, slowing its momentum. These combined risks, volatility, regulation, adoption challenges, and economic shifts, form a powerful counter-argument to the bullish case. Ultimately, whether Bitcoin reaches $1 million by 2030 is a question no one can answer with certainty. Its future price will be determined by a complex interplay of powerful forces, some pushing it higher, while others hold it back. The most significant driver is its inherent scarcity. With only 21 million coins that will ever exist, and with the rate of new supply decreasing over time through halvings, simple economics of supply and demand suggest its value should rise if demand continues to grow. This digital scarcity is the bedrock of the entire investment thesis for many of its strongest supporters. The role of large institutions will be another critical factor. The wave of institutional investment seen in recent years could be just the beginning. If pension funds, sovereign wealth funds, and major corporations decide to allocate even a small fraction of their assets to Bitcoin, it would introduce trillions of dollars into the market, easily pushing the price toward the $1 million mark. Conversely, if these large players remain on the sidelines due to volatility or regulatory fears, reaching that target will be much more difficult. Their decisions will likely be a key indicator of Bitcoin's trajectory over the next 5 years. Global events and macroeconomic trends will also play an undeniable role. Geopolitical instability, a decline in trust in major world currencies, or continued high inflation could all drive more people towards Bitcoin as a safe haven asset. On the other hand, a period of global economic stability and coordinated restrictive cryptocurrency regulations could have the opposite effect. Bitcoin does not exist in a vacuum. Its fate is deeply connected to the wider world, making its path forward inherently unpredictable and subject to events that have not yet happened. In conclusion, while the idea of $1 million Bitcoin is speculative, it is not entirely outside the realm of possibility. Most experts who believe it can happen tend to cluster their predictions around the year 2030, citing the powerful combination of increasing scarcity and rising institutional adoption. However, the path is filled with significant risks that could derail this optimistic timeline. For any investor, the key is to approach these predictions with a healthy dose of skepticism. The future of Bitcoin is unwritten, and while the potential rewards are enormous, the journey ahead will undoubtedly be a volatile one.